Welcome back to Street Smart. So, why buy the whole basket when you can buy the best? Time for a little insight and action. I want to share with you a note that absolutely floored me when it came across my desk this morning from Adam Parker, the strategist over at Morgan Stanley. Here's what he said. Just 5 stocks will generate 25% of all the earnings growth for the S&P 500 in 2013. There are 500 stocks, and yet 5 of them account for 25% of the growth. Pretty amazing, isn't it? Here are the names, and Adam and his whole team over at Morgan Stanley have crunched these numbers. I talked to him about it because I couldn't believe it. He said, no, really, this is how it works. Apple, of course, #1, growing at 20%. Because, remember, the S&P 500 is a market cap weighted index, a larger stock like Apple has more of an impact. So, in fact, that is 9% of the contribution. Its contribution is 9% of the earnings growth for the S&P 500. Bank of America, 75% grower. It's 7.5%. Microsoft, GE, and Google. Those are the names: Apple, Bank of America, Microsoft, GE, Google. Again, these 5 stocks account for 25% of the earnings growth, according to Adam Parker at Morgan Stanley, 25% of the earnings growth in the S&P 500 next year. And you say, okay, so what does that mean? Do I just buy those 5? What's in it for me if I were to do that, as opposed to buying the whole index? Well, based upon the averages of all the targets of those names, as well as the S&P 500, more upside. And you only have to worry about 5 names, right? So 2013 targets for the big 5, 20% upside from where the stocks are trading today, as opposed to just 10% upside, again, based upon all of the different averages amongst all the strategists across the street, just 10% upside for the S&P 500. So, okay, fine, you only have to worry about 5 names, and you get more bang for the buck, twice as much as with the S&P. And you say, yeah, but wait a minute, is there any kind of precedent for this thing actually working, buying, say, just 5 names? As a matter of fact, take a look at this. This year, so far, year to date, the big 5 up 30%, more than double the return of the S&P 500, just 12%. So, you know, Trish, when you talk about how to actually make money in the market, it's not just necessarily buying the market. It's actually being a stock picker, trying to find the names that work and leveraging yourself to those names.